I've sold a lot of my properties. I've sold lands, I've sold apartments. Why? Because any asset that cannot be transferred through a click, I don't want to hold that.
Look at analytics and the comments that come consistently for entire 13 months. There are top 3 search results using which people come to my platform. Number 1 is what is the best mutual fund.
Okay.
Number 2, what is the best SIP plan. What is the best investment.
In the US, what percentage of people cannot deal with a financial emergency more than $500? And they don't have the cash for that. But then you want to take a guess at that number?
20-25%.
Yeah, that number is close to 40%. Well, many years ago, there was something which kept me busy for about a month, and I didn't even look at my account. The stocks dropped, margin calls were made, and I lost 90% of my portfolio. And when I lose 90% of value, I then realized if somebody was watching this while I'm sleeping, wouldn't that be nice?
Hello, welcome to another episode of This or That. I'm Bhartendra saying. Firstly, thank you very much for everyone who has been watching. Today we have got 10,000 subscribers. So thanks to all the subscribers who have been listening to my content and they think there is value in it. Today our guest is Mr. Vineet Malhotra. He is founder and CEO of Compound Express. It's a DSP group of companies, which is a technology platform helping distributors. He has been mostly in US and Asia Pacific in senior leadership roles with HSBC. He was managing director with BlackRock, focused on Aladdin. Aladdin is one of the largest money management platform with about 20 trillion US dollars of the money that the platform is managing. So I welcome you, Vineet. Thank you very much for your time here.
Thanks, Bhartendra. Pleasure to be here.
So Vineet, we'll start from your experience itself, right? First, why India? I mean, spending so much time in US. What made you move to India?
A lot of reasons. I mean, I had done my corporate life of many years. And if I was to sum it in one word, that word would be purpose.
What's the purpose?
Two angles to the purpose. One, after COVID, I started getting involved in Berkeley, which runs an accelerator called Berkeley Skydeck. And I met some really, really smart, creative young people who were solving tough problems. And I was very inspired by their journey of entrepreneurship. And I would often think to myself, I've done a lot of things, but I haven't built something from ground up, from scratch as an entrepreneur. So it was that purpose of building something which can have impact. And then thanks to my co-founder, Aditi, I found that purpose in India because India offers you the scale and also the state of the system with so much friction. We thought we will build something to remove the friction. So there was that purpose. The other purpose is personal. My mother lives in India, and why not be close to mom?
Great.
So both things aligned, and here I am.
So what we'll do in today's discussion, right? Like with your experience, we'll talk about technology. We'll try and understand how is US Asia Pacific investors different from India and what we can learn from them. Little bit on advice, how to seek advice, and of course we'll talk about AI, which you are using in your platform also. Let's start with the US investors only. How are they different? What can Indian investors learn from there? What has been your observation there?
Look, having lived and worked in the US, I can tell you the investing behavior follows certain principles. Uh, let me start by a quick anecdote and tell you that in the US, what percentage of people cannot deal with a financial emergency more than $500? And they don't have the cash for that. But then you want to take a guess at that number?
20-25%.
Yeah, that number is close to 40%. Now, this is a developed market, right? What does that tell you? People don't keep cash. Okay, $400, $500 is like changing 4 tires of your car. Okay, and that number is not available in a bank account for 40% of the population. So the way US investing I have seen work is it works on autopilot. People don't want to invest their time, effort in doing a lot of things that are in the nature of gambling, for example, or watching something go up and down every day. they are super conscious about their time. They are they value their hobbies and their passion a lot more than watching a screen with tickers going up and down. I'm of course generalizing. It applies to a very sort of large chunk of the population. So what workplace investing is the way investing typically happens. If you look at India, about 9 to 10% of the population is exposed to financial markets. In US, that number is more than 60%, 60 to 65%. Now, why did that happen? It's not because 65% of population woke up one day and said, let me buy a mutual fund, let me go and buy a stock, let's do some FNO. It wasn't that way. Thanks to tax-based schemes like the 401k, there was an automation of investing through workplace. Like in India, we love the term SIP. I call it WIP, which is a workplace investing process. Money comes out of your payroll, it goes into a fund, the employer tops it up, and it's not limited to debt instruments or safe instruments, a very large range. So you only decide once and everything works on autopilot. So that investing behavior is very unique to the US. What can we learn?
This is similar to SIP only. If you look at
True.
only difference being it is directly going from your payroll instead of you initiating the systematic investment. Is
So,
that
so
correct?
slight difference there. You're right. In terms of the mechanics of it, the way money flows and all that could be similar. The slight difference is the trigger is the human. In SIP, nobody's forcing you to. Nobody forces you to do an SIP. You do it if you understand it. Whereas in the US, investing starts from your first payroll because there's a contribution to 401k, there's a tax benefit attached to it. Where is the tax benefit with SIP? None, right? If you deduct, it doesn't get deducted from your payroll. So there's a fundamental difference in the starting point, and therefore I say it's an automation of wealth creation. Because you don't take the cognitive load on your head to decide कि ये चालू करूँ, ये बंद करूँ, अच्छा अभी मेरी सैलरी इंक्रीज हो गई है तो मैं 10% SIP बढ़ा दूँ कि छोड़ दूँ, अभी जितने पे है चलने दो. ये सब डिसीजन नहीं लेने पड़ते आपको, राइट? आप वो परसेंटेज प्रिस्क्राइब करके आप स्टार्ट कर देते हो, पेरोल से कटते रहता है. तो थोड़ा सा वो डिफरेंस होता है. उससे एक हैबिट फॉर्मेशन हो जाती है वेल्थ क्रिएशन की. और उसका एडवांटेज ये है कि इट गोज इनटू एनी चोजन प्लेस which you decide based on your risk profile. So I think that's the slight difference. Now, you asked a question about the US, but also let me tell you two other markets, very quick comparisons where I've worked in, so I can talk with authenticity. China. China is another very interesting place where we as Indians should study how investing behaviors happen. China is a very social investing behavior. If you've heard of a platform called WeChat, right? China may this WeChat is a combination of WhatsApp, Facebook, UPI, Instagram, everything social in one place with underlying money pipes built in. So China, there's a lot of social validation. So if your friends are going in a certain direction, you go in that direction. That's the Chinese style of investing. Again, a big word of caution. I'm generalizing. I'm talking in general here. The next place I would compare against is the Middle East. Now, the Middle East is a high trust in, people will trust you only if they have physically met you and know you. So Middle East is very advisor based. You need confidence. You need to understand the person. Yes, technology does play a part in research, but the actual investing is through the person. So that's the Middle East. Now, where does this bring us to in India? India, I think we're hybrid. We do a bit of everything, right? We like going direct and doing all that, but there is a time in life that you want an advisor. There are complexities which you have to navigate through the advisor. So I would say India, it boils down to the segment you're in. And I hope this sort of touching upon various investing styles, whether it's US, China, Middle East, gives us some clues on what could be most relevant for India. Ultimately, investing principles are common across any geography. Risk and reward, fundamental. Transparency is what matters. Does the investor really understand what they're investing in? I think the moment they do that, it equalizes everything, right? It's the same investing in any country, just the channels are different, the triggers are different, and I think the desire to create wealth is different. I hope that gives you some summary. Happy to elaborate.
It is nice. So basically, what I wanted to understand is that in India, basis the comment, basis the SIP behavior, basis the investing behavior, you could say Indians are very focused. So there are two categories of people. One is that they're not going to invest only. They'll say I'll or rather they'll put very safe. They'll put in bank accounts. They'll buy homes. They will keep in fixed deposits, and they'll not expose themselves to equity markets at all, right? Then there is another set who will just do extreme risk FNO and all of that. And even people who want to participate through equity, they're so focused on returns. They don't think about anything else in terms of risk, in terms of making the portfolio asset allocation glide path, right? In US, when you say this, US or China, what's the difference? Like, are they educated enough, or like it's similar behavior? How is it in US, China, Middle East? Like,
See, US generally, I've seen the people I worked with and people I've dealt with, the level of curiosity is significantly high.
hmm,
Okay, so they're curious in knowing. Like they will not take anything at face value unless they have tested it. Take the example of food stuff.
hmm,
People just don't look at the price of a product. If it's a protein bar, you don't just look at the price and eat it, right? They turn it around and look at the ingredients. How much real protein there, how much fat, how much sodium is in it. So what's good, what's bad. So I think there's the risk and the reward thing both is looked at. Yes, people are curious. The other thing is that your peers can influence you, but ultimately you have to think for what is good for yourself, and you understand your goals better. So there's a little more focus on goals, I think. From a very early age, there is a goal in mind, and the big difference is here. What I see, people are very focused on funds or a particular asset class. There, the concept of an asset allocation on an overall portfolio is brought in at a much younger age. Because what is your 401k based investing? You pick multiple things, put it in a basket, and you let it be, right? So that's asset allocation at work right away. Here, for the longest time, I didn't understand asset allocation, even me as an investor. So the population is a little more different, a little more curious, more informed, but not to say that it's not happening here. People are now beginning to ask the right questions, going deeper into the ingredients inside a fund, like an ETF, for example. Understanding what things are tracked inside that index and what does that index cover, it's extremely important. And I think it's a relatively early time for India when it comes to passive investing. And therefore, that awareness will increase. But it does seem to be at a higher level. And also, it's a function of disposable income. The per capita wealth is quite different there. So they are forced to think because the risk of getting it wrong is as high as the reward of getting it right. So you can't just ignore that. You got to start on the right foot from the beginning. And I would say there are opportunities to do that in the US, and people take full advantage of that.
It's been couple of years for you in India, right? Or more?
No, I've been here since June 24. So yeah, a
20,
little over 2 years.
2 years. So you must have interacted with distributors or maybe some investors also.
Sure.
What have you observed about them, and what would you like to tell them? The context is it's been 13 months, about around 13, 14 months since I've started my podcast. I look at analytics and the comments that come consistently for entire 13 months. There are top three search results on the using which people come to my platform. Number one is what is the best mutual fund.
Okay.
Number two, what is the best SIP plan. What is the best investment. Nothing, it's not changed only. This is what they're asking, right?
Yeah.
This is what you observe also. This is what they want to, like, what has been your observation about, and what would you tell Indian investors?
So you're spot on. I mean, that's a very common way of looking at things. But gradually, I think as people evolve, they're not asking what is the best mutual fund. They're asking the question, how can I be the best investor? How can I be a better version of myself? A lot of investing has to do with behavior. And here, thanks to our WhatsApp groups, thanks to unregulated sources of information, people get all sorts of information. Taking advice doesn't come naturally. Certainly not at an early stage, because everybody thinks they know best, right? So my one point of comparison is that people seek advice a lot more easier outside, and here it comes a little later. Once you realize the complexities of life, then you seek an advisor, right? Not right at the beginning. So that's definitely one behavior. Second, uh, there is a desire of instant gratification, but not necessarily linked to a goal. Uh, I want to
They just
invest.
want return double
I
my
just want to
money.
return. But the question, what do you do? For what purpose? No, I don't know. But I just want this money to grow, right? Which it's not such a bad goal, but it's not a sure shot way to get there. Let's say there was a more defined goal that I need to buy this car in 3 years. That's a much more defined goal. And if you set those goals, you're more likely to achieve it than not. So the goal planning and the discipline is also, I feel, it's got some way to go. And lastly, you need a person to stop you from pulling the trigger at the wrong time. And I think that behavioral change has to is sometimes assisted by somebody. Could be an elder in your family, could be your friend, could be your advisor. But the human aspect of not making you do the wrong thing at the wrong time, selling your portfolio in the market just dipped, right, without realizing anything, just hearsay. I think those are the few traits in our investing ecosystem which have somewhere to go. And don't forget, we're not as mature as an economy, right? And things are changing. And I'm again generalizing at a fairly lower end of the segment, the mass market segment. That behavior is different at the ultra high net worth and the high net worth category.
I'm sure. In fact, what you just pointed out, something interesting I want to talk about. One is that, yes, somehow people are not able to link to this high return to their goals. It does not mean that people don't know their goals. So I talk to a lot of people, I talk to my friends. Everybody is very keen on having money for the kids. Everybody is really worried about, when they can retire and all of that. But somehow they are not able to link this goal to, participating in the market. They don't see it together. It's funny for me, right? Like,
Yeah.
if you, and there is another thing, if you look at insurance data, I don't have the exact percentage, but a lot of insurance plans are sold on child plan, right? So people are very clear that they want to save money for the people. There are people are buying insurance policy. We sell around kids planning, but when it comes to markets, they don't. They don't. No,
That's a very interesting observation. I can only say my own self. Right? I also have kids who went to college, and I didn't have a financial advisor till I was in my 30s. And the reason I didn't have, because I thought I'm smart. I worked in the financial sector. I'm a qualified chartered accountant, all of that. So I thought I know what I'm doing, but I think usually doctors are not the best for themselves, right? So I felt the need for discipline, which is where I hired a financial advisor. I still have the same financial advisor. And what he did was he made me do the math around goals. It's not just good enough to have a goal. Okay, Vineet, do you even know that this kid in the US will be going for 4 years of undergrad and it costs this? Did you only consider tuition, or did you also look at living expenses? Did you consider travel? And suddenly your corpus needed for a child education is very different. Now, doing the math to say at what rate of return will you get there, assume making certain assumptions. The financial planner did a full plan, an estate plan. And I think these are the kind of practical techniques which open your eyes. You may think you have money. Yes, you know broadly there is a goal, but then there are so many variables that you can overlook. And I think that financial planner really changed the way I organized myself. So I think he brought discipline more than anything else. It's not like he picked the best fund. I don't even know what a best fund means. But he picked a fund which was suitable for me given my risk appetite and knowing what my long-term goal is. And knock on wood, I surpassed those goals. I was able to meet those goals very easily. Both my kids have finished their college and they're working now. So I think the point I'm trying to make is that even with the best intent, unless you operationalize it through a person and through some math and through some technique, wealth creation just doesn't happen.
we'll talk more about advice, but मैं एक चीज़ बोलना चाहता हूँ आपको यहाँ पे इस point पे कि I'm doing these podcasts, so many podcasts, and it might appear that I have not made a mistake, but I want to share a story. I started working in 2008, uh, and just then one of my friend used to work with Canara Robeco Mutual Fund, and he used to tell me every day, every week, every month, start an SIP, start an SIP. I did not, he was my friend. I did not listen to him. Only when I myself joined Canara Robeco in 2012, then I realized, yeah, what a fantastic product. What was I doing, right? So the two things I want to point out. One is that unless you really understand, you will not be able to start. Number two is that the thing that you talked about in Middle East also is high trust. In India, people don't trust advisors. I think that's a big problem. And even when you see the comments on my podcast in general, uh, it seems they are making money. They will make money, right? Why will anybody give you an advice, right? So let's talk about you being in 2 years. You're helping advisors, with technology. How do two things? How do people find an advisor, and how can advisor build this trust? Because I know advice is important, and it helps you, streamline your finances, and in general, find a right path for finance or in general also. So
Let's for a moment step outside of our finance world and look at other professions. Right? Can I ask you the same question? You want to find a doctor. What do you do? Right? How do you discover the need for a doctor? You could self-medicate. That's so many things. You got Chat GPT now, and you got a pharmacy on speed dial, right? Between the combination of a pharmacy and Chat GPT, you could medicate yourself, and
I
maybe you'll
just
be
give you,
fine.
I'll give you an example also. I was not well last week. I myself took antibiotics and I stopped. It recovered.
Right.
And then I again fell sick. I went to the doctor. So doctor
Right.
said you had to take them for 5 days, not 3 days.
Not really. There you go.
So,
There you go. So you've really answered that question yourself. So why should finance be different? I myself had a situation, and I visited 3 hospitals in Bombay to find different levels of advice in all 3, and we settled on one for a certain member of our household who needed an operation. So in financial advisors, word of mouth and referral plays a very big role. I don't typically go to Google and say, find me the best financial advisor within 5 kilometers of my house. वो रेस्टोरेंट नहीं है जहाँ हम पूछते हैं कि ये कहाँ से अच्छा खाना मिलेगा, right? This is a far more serious thing. So number one, it comes from referral from another colleague. Usually at the workplace, it plays an important role. Your friends and others who work along with you often tell you about a person they worked with, and that works. Second, I think the views of that advisor become very important in this world of social media. You can hear them. You can hear them and see whether your thoughts align with that or not. And you can see how effective they have been in their own journey. A person who can demonstrate their own journey to me is more credible than a person who can't. So that's another factor in how you pick someone. And third, I think there is this intangible of chemistry. It has to work. Yes, they will make money. Of course, why would they not make money? I would want my financial advisor to make money, because only when they are profitable can they serve me well, right?
Right.
If they struggle to make money, then they would probably make wrong decisions. Right?
I want to insist on this point. I mean, so many of my friends, just by knowing that I do this podcast or I'm from the finance industry, they seek advice on which one to. So, which means one thing, they need advice,
Right.
but somehow they don't want to pay for it. It's beyond my understanding. Why don't you want to hire an advisor? How? So let's get to the second part of the question. How can then advisors build this trust? How can they build this trust with the customers?
See, the cost of advice is just one part of the whole equation. When your friends in this example say they are comparing a fund to like a stock, they just want to know which will go up and which will go up in the shortest amount of time. Without full knowledge of their risk appetite, let's say the market drops 30%, what would they do? Right? What kind of behavior would they display? So, comparing an investing decision with just the cost, which is one dimension. Investing is a multi-dimensional aspect. There are many dimensions to it. There is risk, there is cost, there's return, there's goals. And I would throw in two other angles which people often overlook: taxation impact, and third, operational overhead. I file taxes in multiple countries. Now, every time, if I go into a PMS scheme which churns 20 times a month, I have to show 20 times the capital gain in each country. And that's a lot. In another country, their unrealized gains are taxed. So if I have a mutual fund which keeps on increasing in value, the NAV goes up, but I actually don't get money in my bank account, I still need to account for that and pay. So now I've just counted 6 aspects of investing, and the cost of advice is just one aspect. So I think somebody should weigh this. Like, I would go back to the doctor's example. I mean, when your doctor takes that 1,000 rupee fee and gets you better, very quickly you forget about that 1,000 rupees. What you remember is, are you better or are you not better, right? And your health comes in. So why should financial health be seen any differently? And yes, we are all cost conscious as a race. I think that was one of my biggest learnings here, that the price of software is quite low here. The general tendency to keep it low. And so is the price of so many things. So we are cost conscious as a society. But somewhere people have to decide whether it's worth it. And the best way to learn, I think, is mistakes. I'll give you an example. I used to do margin trading myself, right? And it was many years ago. There was something which kept me busy for about a month, and I didn't even look at my account. The stocks dropped, margin calls were made, and I lost 90% of my portfolio. Okay, it was one. So it was like one stock. And when I lose 90% of value, I then realized, if somebody was watching this while I'm sleeping, wouldn't that be nice? So sometimes, Bhartendra, the thing is, people realize through mistakes. It's not the cost of an advisor's fee or what an advisor makes. It's the cost to you overall in your life, and how those mistakes can be so expensive. But the thing is, that cost is not an immediate cash flow. So it comes later in life. And I think learning through those mistakes is one of the best things, because they will not do that again. And they will be, there are many models of cost these days. So it's not like one size fits all. You could have costs where the fees paid through the products. It could be costs where you are directly compensating the advisor. So there are many ways to incur that. The most important thing is have a human with you who can be with you all the time. And I think your friends will probably realize that need.
Interesting. So you talked about being a human with you, and you have spent substantial time in US focused on Aladdin. Can you talk a bit about there? What is Aladdin actually? And does it give advice, or we also want to touch upon technology or AI advice versus a human advice? How do you play both? One is better than the other, you know.
Sure. Let's start with Aladdin. Aladdin was created by BlackRock. It was force fitted into an acronym, which is the Asset Liability and Debt Driven Investment Network. It was
Oh wow.
force fitted through one of their clients. There was a naming competition. So at its very heart, Aladdin started as a risk management platform.
Okay.
See, when you buy something, especially if it's a bond, you need to understand the risks of that, and being able to map those risks very clearly and provide transparency. So that's the ethos of Aladdin. It's a full money management platform. So anybody who's managing substantial money, it's got end-to-end everything, right? From research to trading to accounting to post-trade to client reporting, analytics, the whole 9 yards. So Aladdin is extremely powerful. Where I think something like Aladdin helps is getting full transparency into what you hold. So tomorrow, if let's say, pick a stock, and I'm just randomly picking, if there was some news in the market about Apple, right? And Apple was to come down by 10%. How would you stress test your portfolio for that shock? Try to do it now. Aladdin could do it in seconds, right? So 7 levels of look through into your folio. You have funds that hold other funds. Then there are ETFs. So this Apple could appear in multiple places to get your exposure to that. and stress test it. That's how Aladdin stands out. So it's a great platform, but the downside of any great platform is not for everyone, right? The Ferrari drives really well, but it's not for all the roads of Mumbai. It's not for all the people, right? Because it's got a certain price tag. So Aladdin has helped large organizations, but there is also a retail side of Aladdin which is used for wealth managers. Now, it's my previously I worked with BlackRock, but now let me focus on the more generic question of what it means from an Indian context. Uh, you have Aladdin-like functionality today. Even in a platform like ours, in Compound Express, you've got many things a distributor could do to get greater knowledge of the assets that they're investing in, greater knowledge of the clients. And the question about AI and technology, let me again go back to my medical analogy. You walk into a doctor's clinic and you see that doctor with one stethoscope around his neck and one thermometer in his hand. How much confidence do you get? Right? So this is what it comes down to. In today's world, AI is a combination of an MRI machine, a CT scan, a blood testing machine, a cardio machine, all of that in one. So I don't see AI as an AI versus human thing. It is how much assistance can AI provide the investor, how much assistance can AI provide the doctor. And AI is here to stay.
It's not a hype.
It's not a hype, right? I don't believe it's a hype. And I'll tell you why I say that. I say it very objectively. If you remember 10 years ago, we used to talk about blockchain, right? Crypto, blockchain, all in the same breath without really knowing the distinction between two sometimes, right? You think of it as the same. So blockchain was not applicable everywhere, but it started off well. There was a lot of promise. And one test of any technology, I would say, is scale. If a technology gets adopted at scale, then it's automatically proving its worth. If you look at ourselves, you, me, everyone around us, ChatGPT, Claude, Perplexity, whatever it is, Gemini, they have some tools with them and they are using it, whether for effective things or frivolous things, but they are using it. So AI is not here to go away. I mean, why would it go away if it provides real utility? In the financial sector, maybe AI is used in a different way, almost like it's a positioning thing. If AI is positioned against a human, I think that's the wrong positioning. It's like positioning Google against your doctors. Why would you do that? Yes, Google can help me get information, but the doctor will be the one who's finally authorized to give me that real advice. So I see AI as a way to increase the intelligence of the advisors whilst giving more intelligence to the investors. But ultimately, AI helps make better investment decisions in conjunction with the human. That's how I would like to position. And I think we've seen some early outcome through the AI we offer in our platform on Compound Express. You will see.
Can I get some examples?
Yeah, sure. See, we had a thesis. We had a thesis that people will research funds, so we made it easier to research funds. Show me the best flexi cap fund. Question on AI. What comes out? It then counter asks you some questions, right? And then it gives you some parameters, best in terms of AUM size, expense ratio, performance. Which other angle? Standard deviation, risk. So there are many angles that AI, you can have that conversation with AI like a mature adult, like a PhD that you're talking to. So one thesis was that people will use it for researching products. The other confusing area is views. There are a lot of gurus and pundits in our market. Everyone has a view. So what is X's view on consumer goods as a sector? And you could have 4 different AMCs with 4 different views. What AI does is it consolidates all that and comes out with a consensus view. So the power of AI is good for finding things you didn't know. AI is not that good if you knew it and you were just using it as a query tool. That's not what AI is all about. So product I talked about market views. Let me tell you the most useful use case is client book. So Bhartendra, you're an MFD, you manage 1,000 clients. I bet you don't speak to your 1,000 clients. Even a year would pass and I don't think you would cover all 1,000, right? But which are those clients that you need to talk to? Now, this is something you don't know. One is a reactive mode of operating where a client calls you, हाँ मेरा ये बेटी का शादी हुआ और बेटे का शादी हुआ, ये पैसे इन्वेस्ट करने हैं, कहाँ डालें, ठीक है? So that's a very good phone call that you will get. But that doesn't happen often. More often is market movements create impact on portfolios. And if you asked AI, show me my clients who suffered the most last week, AI will throw up that list. Now here you have 50 people who you should talk to, because these 50 people are not going to be very happy with you soon. Soon when they realize, and another week passes and another week. So I found the client side of AI to be very, very effective. For example, marrying a view, like there is a view on consumer goods which says it is negative. Assume, okay, these are all hypothetical. And you have these clients with over 40% of their portfolio exposed to consumer goods. Now, the client doesn't know that, but you as an advisor can spot that. That would be a tremendous value add. But you can also generate proposals with AI. You can do risk assessments of the customer and their portfolio and do the mismatch. आपका risk tolerance 20% है, पर आपके portfolio का 60% है. तो ये mismatch है. आप देखो क्या करना है. उसको change करना है portfolio, rebalance करना है, या फिर आपकी अपनी risk tolerance increase करनी है. AI से बहुत interesting conversations हो सकती हैं advisor की अपने clients के साथ. So I feel AI तो एक phenomenal tool है. हाँ, on a lighter note, कुछ लोग तो AI को बोलते हैं ये मुझे शायरी लिख के भेजो, मैं उसको email में डाल दूंगा, right? तो AI does that as well, but I would say you got to look beyond the surface of these nice pictures and images and turn up a PPT for me. I think that's a very low-level use case for AI. The really stronger use cases कि advisors के अंदर जो practice में उनकी जो extra intelligence आ जाएगी, उसको जब वो अपनी capabilities of client knowledge से combine करते हैं, they can say नहीं ये 50 client में I know ये 10 clients में problem है, let me tackle the other 40. That's where the real power of AI comes. And we have seen this, and I have data to show where it is being used most. Proposal generation is a very popular feature. Risk assessment is a very popular feature. Reading market views, not so much. Because I feel like every advisor feels they have a sense of the market. So maybe they don't need AI to, decipher that market for them. So I hope this gives you a very a flavor of what are the kind of things that in the real world AI is helping advisors do. Certainly not a hype.
No, it is not.
What is a hype though? And I was thinking to myself that why does this AI get pitched with so much skepticism? जब big data आया था और बड़ा database में, वहाँ तो कोई skepticism नहीं था. Database है, tables हैं, query हो रही है, right? There's no skepticism. AI में क्यों skepticism है? Because of the amount that is being raised by companies to fund AI. That is a humongous amount. And therefore the skepticism कि अगर इतने $1 trillion आपके इन्वेस्ट हो रहे हैं तो क्या इतने $1 trillion की वैल्यू मिलेगी कंपनीज को? वहाँ पे skepticism आती है. माइक्रो लेवल पे कोई skepticism नहीं है.
तो वो तो है. I mean, if you look historically, any invention, the original investor never make money. It's the you look at railroads, you look at internet. It's only even our industry. If you look at the platforms which came in 2012, 13, they were the first movers, but they're nowhere now. It's different platforms. So it's
somebody has to do the heavy lifting.
Yes.
आप देखो SpaceX की आज बात करते हैं लोग, but SpaceX has been revolutionizing the way rockets are reused. ISRO also used to send rockets to space and still does. So what's the difference between ISRO and SpaceX? If you find a better way of doing something which is more economical, and you can take the rocket up and bring it down and reuse it, why wouldn't you do that? And AI has given us to some extent a better way of doing something, the better, maybe not cheaper right now, but over time it should be cheap. So जो 3 चीज़ें होती हैं ना, better, cheaper, faster, हर product में वही देखते हैं. तो better मिल गया, faster मिल गया. cheaper वाले में अभी debate है कि पता नहीं cheap है या नहीं है. But जिनका free में चल रहा है उनको तो ठीक है. But remember, somebody is paying the cost of this AI, and somebody is paying a huge cost of this.
Correct. In fact, I've thought a lot about this entire debate of AI taking jobs and how people have to evolve their skills. One thing that's my personal conclusion is that the ability to think clearly, because you have to ask something to AI, right? Like you said, what is the use case? So where humans will always thrive is your ability to think clearly and what to ask is unbeatable, right? Your taste, your domain knowledge,
Absolutely.
and how to think clearly. So in that context, advisor and AI combining together is way to go. It's not that AI will beat advisors or advisors will
Yeah.
beat AI, right?
See, one thing you can never beat is that advisor's knowledge of that client. The AI will have a lot of facts about the client. But there's also times when AI, you ask the same question after 10 minutes, may give you a different answer. Because things rapidly change. Whereas the advisor has been associated with the client for years, truly understands both sources of income, expenses, risk appetite, personal ambition. An advisor has guts. AI doesn't have guts. So that's a very big tagline for me. An advisor has guts. Then advisor will give you the conviction whether you should pull the trigger. When I say pull the trigger, I mean buy something or sell something. Whether I should do this or not. I mean, reading a lot can make you super confused. If you start reading the internet for every ailment, you will conclude that it's a very serious disease. But how serious it is, only the advisor can tell you whether it's really serious or is it just a combination, a lot of data making it look serious. So the role of advisor is invaluable in that sense. It doesn't mean, though, that the end consumer will not use AI. They will. And they will also question the advisor and have those debates. And I think they will demand more tech out of the advisors. ये क्या कागज भेज दिया है, इस पे क्या लिख के भेजा है, मुझे नहीं समझता, मुझे ऐप दो, इसके पूरी हिस्टोरिक रिटर्न्स दिखाओ, XIRR दिखाओ, मेरे को एट्रीब्यूशन एनालिसिस चाहिए. ये सारे क्वेश्चन आप पूछ रहे हैं. पहले तो क्या होता था, लाख रुपए डाला है, 1.5 लाख हो गया, खुश. अब वो जनरेशन भी और डिमांडिंग हो गई है. They have seen it. They have seen in other places that there are ways to understand different asset classes. And they will ask, अभी कल की बात है, एक ईमेल आया एक फंड हाउस से मेरी वाइफ को, हम अपना मल्टी एसेट एलोकेशन फंड में एसेट क्लासेस चेंज कर रहे हैं. तो हम दोनों बैठे हुए थे एयरपोर्ट पे, वो ईमेल आया फ़ोन पे. शी सेड अब क्या करूँ? आई सेड आपके एडवाइज़र से पूछो. राइट? But then she will ask the advisor, but she will also do some research. She looked at the riskometer before and after and saw कि वो fund का risk categorization change हुआ है नहीं. All I'm saying is that people are becoming smarter with information. The fund was going to add some commodities into the exposure, which it did not have earlier. So commodity का behavior कैसे होता है? ऐसे थोड़ा पढ़ो उसको. तो AI को पूछो, ये फंड में अगर हमने ये कमोडिटी डाली तो उस फंड का बिहेवियर कैसे होगा. ये सब नॉलेज लेके मंडे सुबह एडवाइजर को फोन जाएगा कि अब आप मुझे समझाओ. सो अब अगर एडवाइजर इज लेस क्वालिफाइड देन द इन्वेस्टर, सो देन देयर इज अ प्रॉब्लम ना. तो दोनों को AI यूज करके अपना लेवल ऊंचा करना है. आई थिंक दैट इज वेयर द वर्ल्ड इज हेडेड. इट्स अ विन विन फॉर बोथ, and certainly it's a win-win for the tech companies at this point who are creating a lot of these AI. And the cost should then justify that behavior. Because if the costs stay extremely high, then mass adoption of AI would become a challenge.
So Vineet, I think from what you've just spoken, a very interesting thought has come to me about the next generation, right? In fact, a lot of examples, the government has missed it. In fact, I've spoken to last in 60 podcasts, there is only one person who has spoken about Generation Z, which is Ashish Somaya, and he says these are going to be the people who are going to be the future investors. These are going to be the richest Indian generation, right?
Absolutely.
So let's talk a bit about them. I mean, do you think they're going to seek advice, and how advisor has to plan for the next set of generations?
So I'm glad you mentioned about the next generation. And you're absolutely right. The next generation will be the next generation of wealth creators as well. I mean, you look at some of the things they're doing, and look at some of the founders of startups, for example, or those who are employed in the tech industry, or even otherwise, there's a lot of wealth coming out of this generation, and the need to manage that wealth. See, wealth, we often confuse it by like growing the wealth. There are three aspects of wealth creation. One is saving, the other one is protecting, and then growing in any order that you may take. So they have to focus on all three, right? And I think the positioning of an advisor should not be seen as a reflection of the competence of the investor. If you position it that way, then why am I going to a doctor, or why am I using a trainer in the gym? I can go and use all the machines in the gym. Why do I need a trainer? Why do I need to pay him this money? So there could be some who think that way, but going forward, this next generation will put pressure on what is a fundamentally, a unscalable mass of advisors, because the advice gap is huge. If you look at the total wealthy population and see the number of advisors, it's minuscule. A couple of lakhs of advisors doesn't cut it. So I think the next generation will definitely look at advice, but the shape of that advice will be different. It will not be advice about tell me which fund to pick up. I think they will become friction removers. Smoothen my process. Now I need to invest in 3 asset classes in 4 countries. I want to buy this in Korea. I have a commodity where I need to go through commodity exchange, and I want to buy REITs in this country and take real estate exposure here. I might throw in some crypto as well. Now, when you want to do all this by yourself, it takes time. So an advisor who's well equipped to handle multi-assets, multi-country, with technology, that's what this new generation will look for. They will also look for a meeting of minds. Maybe the new generation of investors will also need a new generation of advisors. And I think it's a very healthy cycle that you will see, that a lot of youngsters will choose to become either distributors or advisors from the start and not by accident. It will create a profession of advisors, well trained, well equipped with technology. That's a win-win for all. So it's not like the new generation will always be a DIY generation, like they are with many things. And I think that spirit of DIY will be there, but the realities of dealing in the financial world with a lot of hiccups. Take the example of taxation. A youngster with returns can generate a lot of statements showing his capital gains, salary, something else, rental income, stick it all in a platform and generate a tax return. How confident will that person be to file that tax return? And now comes an inquiry to handle that inquiry, that I see these turnovers in your account, and can you explain that? Having that helping hand would still be needed. They may do the homework, but they will use a CA or a CPA to file their tax returns. I don't see investing as being any different. It'll be the same. So I hope this kind of clarifies both from a advisor and investor perspective. There is a next gen in both categories, not just in one category.
Fair. I mean, it's been wonderful talking to you, Vineet. I mean, as we conclude this, I just want to understand what in so many years of your experience in investing and managing investment platforms, what are the best practices for investing according US, China? You've seen all the markets, so just help us understand what are the best practices.
I think the word you used is practices. And I'll just build on that. The important thing is not to be theoretical, but put it in practice. Okay. That's the biggest sort of piece of advice that I can give, which is all that we've talked about. If it's academic and not put into practice, then it just is not using its full potential. There are very simple techniques to wealth creation. Starting early would be one of my first things. Biggest personal regret I have, starting about 10 years later than when I should have started. And I'll tell you, I'll close on a little personal note. When my daughter turned 18, I took her to a bank. Most people would buy a necklace, a piece of jewelry, a watch, whatever, right? We walked into a bank and opened a bank account and a brokerage account. And the big difference in that account was no longer a joint account. It was a single account. So teaching her how to fish and how to invest. Today she's got an account on Charles Schwab and fully investing by herself and very confident, very capable. At 18, she didn't know what a bank account is. She could not understand the difference why a credit card has a $500 limit and the bank account is 500, and why do both look the same? What's a debit? What's a credit? From coming from there into being responsible to invest. So first thing is take that step early and just practice it. You may get a few things wrong. You may find a few assets you've invested in which don't return the right amount, but start. I mean, the second thing is diversify. Don't put eggs in one basket. And now diversification doesn't mean in the same stock exchange. Diversification, there are tremendous opportunities through the LRS scheme, through Gift City, going out and putting money in different currencies in different countries. I think take advantage of that. When we were growing up, we didn't have these opportunities. So I think that's the second thing. Think beyond current borders, right? Money has no borders. And the third, do it in a way that your assets are clickable. It's a personal favorite of mine.
Which means what?
And I've demonstrated it. I've sold a lot of my properties. I've sold lands, I've sold apartments. Why? Because any asset that cannot be transferred through a click, I don't want to hold that. So go in for clickable assets, which effectively means, technology, digital, AI. The word I would use is, if you can't click it and move it, don't buy that asset. So those would be some very practical ways. And lastly, you will reach a stage in your life where your complexity is beyond what you can handle. So do you want to spend time handling the complexity, or do more interesting things with your time? Because time is finite. And therefore, outsource that to somebody who can handle it. India is the land of outsourcing. Companies outsource a ton of things to India. Why not we outsource our complexities and use an advisor to help you handle those complexities, whether it's taxation, whether it's returns, goal planning, compliance. And going forward, these things are only going to increase, right? So use that helping hand when you have it. It doesn't cost a lot. In fact, it's the best investment you can make. Because if you look at it over a 30-year period, it's just a drop in the ocean. So I think those are a few practical tips that I can say. Bhartendra, it's been a pleasure talking to you. And
Same here.
Thanks for inviting me to your show. And I hope you keep covering this and other interesting topics.
Thank you. Thank you very much for coming, Vineet. Thank you.
Pleasure being here.
Yeah.
Thank you.
Thank you.